Sanjay Nayar, CEO and country head of KKR India, joins us now in the studio to talk about that. Hi Sanjay, good morning and thank you for joining in. We were reading that the inbound deal activity has picked up quite a bit. So in the month of July itself, there have been some 56 deals worth $6.5 billion, which is a huge jump compared to same time last year. In your mind, with the new government on board, do you think that the sentiment has picked up enough for deal activity to pick up so much?
Look, I think the sentiment is very positive. There's no doubt about that. Sentiment is positive even across the overseas investors who obviously give money to the private equity firms. I think the firms are a lot more constructive in looking at deals. So there's no doubt the deal pipeline has picked up. The deal activity in terms of closed deals, I think, is still the jury is out. But clearly there's a lot of activity in terms of ideas and meetings. I would say that sentiment is obviously at least one quarter of the input to make this get reactivated. But I would say the real economy and the revival of that and seeing real signs of that, that I think is still some distance away. So what happens in a market like this, obviously the expectations go up a lot in terms of valuations. And I think the private equity industry, having come out of the 05, 06 vintage, is a lot more disciplined today. All of us are. Nobody is killing each other to overpay, which is good in a way. So there is that constructive tension between, expected valuations because India is running away versus private equity, which I think is a lot more consolidated, a lot more disciplined. And I think private equity is going to be able to provide very, very valuable, long-term, high-quality capital to Indian companies for growth. So I think that activity is high, the tension is good. So I think we will hopefully see some deal closures there.
Okay. Well, just a word on the markets. I just want to point out some of the mid-cap stocks that are doing exceptionally well. Crompton Greaves is up 3%. In fact, Bhushan Steel, that extremely beleaguered stock, is finally seeing 5% higher in terms of gains. I wonder if any of their coal blocks are in the list of blocks that the government would want not deallocated. And then, of course, a whole lot of auto ancillaries are doing exceptionally well today. So Amara Raja, Bharat Forge, Ahmednagar Forgings, all of them up and about. Okay, Sanjay, let me come to the sectors. Let me come to the statement that you made that actual economic activity has not really picked up on the ground. I mean, you are actually, you have your hands in a Cafe Coffee Day, in Magmuff & Corp, in a whole host of companies. Hasn't consumption picked up?
I think, Lata, in terms of pent-up consumption, yes, there is a bit of pickup from pent-up consumption, whether it's in rural India or in urban India. And without going into specifics of companies, I think that statement is probably valid. Now, is it, terrifically high year on year? I don't think so. What I meant by real economy was that you've got to get India back to the potential in terms of where it should be in terms of real growth, and I think we're at, whatever, 5%. My real issue is that when this government is settled down, I think it's too early to judge it. When it's settled down, how does it really get the structural issues out of the way such that you get the potential growth back to the 6% arena rather than worrying about these quarter on quarter, 5.5, 5.6. I think the potential growth actually has gotten reduced over the years, the structural issues. And we know the issues, so there's no point going through them again and again. How they tackle that is going to be the key. And I think that's the only way you get to higher potential growth without stoking inflation. That's the tricky balance. When we see that and you get a roadmap of that from the government, and I think this government is so hardworking and has such fantastic work ethics that they'll deliver, I'm sure, 80% of what once they have a map. When you see that, I think that's when at least some of us will get really much more confident that you will see real growth come back. Right now, I think we spend too much time worrying quarter on quarter, month on month. I think we really have to see the structural shift in the potential growth.
So this 5.7% GDP that we got, you would say is only because of extremely depressed levels, and therefore you're not seeing a sustainable 6% anytime soon?
Difficult. I mean, without stoking inflation, I think it's difficult.
Okay. So you have to linger here for another 8 quarters before...
You could linger here for at least 4 quarters, which is, look, it's better than 4.5%, so don't misunderstand me. Your question was the real pickup, I think, will come when you take the potential up again, and then you start having, a lower investment capital output ratio, and then again you get back on the more virtuous cycle. that's a bit of a difficulty right now.
When we speak to a lot of private equity players that we have been speaking to in the last many years, they say that, India continues to be ranked very low when it comes to the ease of doing business. In that sense, has the government done anything in the first 100 days to fix that problem?
I think the signals are absolutely. I mean, they're trying very hard. I think they sit across the table. They're giving a very clear message. They're open for business. I've had a couple of meetings where you can actually table issues for the industry, not for a company. And, you get a response back. So I think they're very receptive. They're listening. And look, again, I think, Sonia, you can't expect magic in 100 days. But I would say that, if you have this kind of attitude of listening to the industry and coalescing the issues and trying to tackle them, I think that's very positive. And that signal is going all the way back overseas.
Okay.
So I think the sentiment is much better.
There are some news reports that we would like you to speak about. I mean, there are talks that KKR is perhaps lending some money to GMR, perhaps 1,000 crores or so, in the form of a structured deal.
Not going to comment. I've been on the show many times. I know you and Lata for many years. There's no comment on any of this.
So basically,
Basically, what do you mean? No, basically nothing is happening.
I thought you were completing your question. A lot of the infra guys are the ones who have been neck deep in trouble, over-leveraged balance sheets. And we saw JP, of course, being successfully able to sell off some of its good assets. Do you see that trend continuing? Would private equity be interested in shouldering that burden?
Look, I think the well-meaning conglomerates and entrepreneurs who want to cut down debt, I think there is no doubt that they're taking the first few steps in terms of actually selling assets that they've built with great pain. In the last 6 years, it's been difficult to build these assets, and they've done it. And they've run into a lot of headwinds, either because of the economy or because of poor capital structure, delayed projects. And I'm quite actually pleased to see them actually getting out of the assets and selling them. So you've seen Jayaprakash do a few. So I think that's a great sign. Will private equity buy? I think depends upon private equity firms' mandates. Some of them buy core infra assets, some people don't. Some buy annuity assets like highways and toll roads, and some don't. But there will be a lot of capital. If your question is that, I think there will be a lot of high-quality capital available with long duration to this sector, as long as these assets are functioning and there is no policy rollback, and you can actually see, some return on capital, whatever it may be. I mean, you can resolve for 12% rupee return.
In a space like power, everybody is beleaguered. So, you have to get capital in from outside, from private equity or, venture capital, someone from outside. Is that capital available?
It's available, yeah, absolutely. It's available with infra funds.
You see some deals happening before the
sovereign wealth funds, available with some of the larger pension funds, absolutely. I'm not sure deals will happen in a hurry, but I think, look, you've got to understand, the Indian entrepreneur is the one who can actually complete the project and get it going. I don't think a foreign pension fund is going to come and complete the project, which is stuck 90%. So it's the Indian entrepreneur who can complete it. And I think the government is going to be actually quite supportive. Some of the initial discussions I've had, there is a very well-meaning angle from the ministry where they would like to see the last mile funding being provided. They would like to see projects getting completed, because just getting those off the ground, getting the PPAs and the linkages done, you actually don't need that much more thermal capacity to come on stream if you just get what you have going. And frankly, over time, you've got to move away from thermal anyway. Not that thermal is going to go to zero, but I don't think there is going to be that much more thermal capacity. So in that construct, some people who can hang in there with these plants, complete them, get them running, there could be pretty significant demand from foreign capital who might want to buy a matured asset.
Right. What will thermal get replaced by?
No, I'm just saying, I don't see it growing at the same pace. I think there's going to be renewables over time, and I think, again, this government seems to be quite focused on renewables as well. Look, they got all the forward-looking ideas. So, as I said, if they do even 50% of all of that, it'll be fantastic.
Okay, Sanjay. Pleasure speaking with you as always. Thank you very much for putting this big growth story into perspective. We have to struggle perhaps for the next 4 or 6 quarters before any structural improvement in the potential growth of the economy happens.